What's going on, guys? Brandon from Boiler Room Trading. Today we're going to go over a in-depth trade recap, and of course it's our friend Tesla. Today we cracked over 537 on the small account challenge, just breaking over that 2,000 liquidity in the cash account in the options from last week's start. So averaging just about $100 a day on the tiny account. So let's get into it, see what we did here. So Tesla is what we traded today. I have two options trades. Netted us about $380 today. Lost a little bit on shop, so the year-to-date isn't up where it was before. We gave some back. We're going to talk about Tesla specifically because obviously it's a big hot topic right now, and I want to get you guys prepared for what's next. So what we're looking at right here are my fills. And what we traded. So we purchased calls. That's this week's expiration, January 7th, 510. Puts, I'm sorry, puts, going down, puts, not calls. As we get into it, the 510 put, you can see on the right side here in my activity, the first one was purchased $3.50, $350 in, and then $530 out. So quick little $180 or so winner there minus commissions. Second one was a little better, $430 in, $630 out. So a little $200 winner there. So how did we end up making a quick little just under $400 winner there on Tesla? So let's get over to Tesla. So the two shorts were relatively early here. And of course, the first one was the first dump right out of the gate. We took 5/10s, and it was essentially the second or third minute fill here. I would have to open up the platform again, but I'll go over that next time. It was a rejection of the 100 EMA and snap of the 200 SMA. Here is just snapping around here because at this point, you got to think of the psychology of the trade here, coming from a day where we had just witnessed a open to ramp, and I had a breakout level here and a weekly breakout level just under 500, 499 of course, and a nice whole dollar as you would watch the 5. So just that day alone, marketing 32.6 points, and then of course after hours just at the close there, up into pre-market another 23 points. This thing, there had to be profit takers, right? So when I got short right away in the hits of the market in the first couple minutes, I had a very tolerable risk. Something that had moved that insane in just 2 days, pre-market, after hours, and where we're at right now. Getting into here, I was risking, about 0.7%, 4 points. It seems like a lot on paper. This thing is ranging insane. This thing is putting in like Amazon range at the moment right now, plus some. So. But my risk tolerance at the start here, I knew to break out an all-time highs or even just a smidge above, I would have that opportunity to capitalize on a bigger move to get in right away just because of that rejection point. So we got short on that 50 SMA intraday and took it down about 10 points for that first little 510 put scalp, and then it retraced and we started looking weak. And I can't really tell you exactly why I took it here because we have elite systems that I got to protect my team. They pay for high quality content here, and if you are interested in joining us, there's a plug. Shameless, it's in the description, but check us out. But this retrace happened right here. Started getting a little bit of weak here. The 100 EMA could not hold. The 50 SMA looked like a very nice rejection point. We had 3 lower highs stacking up on the 1 minute, and we had a really nice break point from the first breakdown. So this was very limited risk coming back into this short, right? So we took another one right here. Same thing, 510 put. I made that $200 on the way back down here. Now I got out a little bit before opening price. I caught the opening price dump here, so almost 12 points on this option scalp here. Of course, if it was equity, it would have been killing it a little higher, but we capitalized, and I picked the reversal point right here at yesterday's close and yesterday's highs. So I want to talk a little about it with you guys. Very simply why we took that. So in the market meter, we don't have any essentially unfilled gaps on Tesla on the way up on the daily, right? So as we're looking at this, we have Tesla's price action coming off the 9, right? Gap up, price action came down, filled, moved up, right? Gapped up. There's no fill, but we still have trades that happen in this range of the gap, right? So if we're looking at this right here, we still have some trade in that range. We're up here, we're blind, right? At this open, there's nothing up here near that 540 range after putting in a solid day like that. It's insane, So we have no historical data to go off of, no support, no resistance, no nothing. We're in brand new territory. So on a gap up like that, it's a very good, setup to catch those early puts, to catch those early profit takers, because we have a huge unfilled gap. And where's the gap? Well, here's yesterday's candle. It's 113 top, and yesterday's close was a big old full candle. So if it gapped up that hard, there's a very high probability that we're going to fill that gap down, then it gets sucked back up. I called right about 525, 530, as I said Tesla would probably end at after the gap fill. So we had there, and we had a reversal point perfectly. We just marked out that one price level is all we used on those 510 puts for the 2 trades today, netting $400. And then we, seen it this big squeeze that it had later on here was a pretty solid W pattern and breakout, and then just kind of ranged out. I thought we'd end a little lower. I was thinking 525, 530, so pre-market lows or the opening price. I was a little high on that one, but we're gonna see where it goes tomorrow and see how the market does. But I just want to talk a little bit about that trade in-depth recap, because when you do get a gap up, it's usually going to be an exhaustion gap at this range, right? So again, just to reiterate real quick, if you're having these gap ups, these are common gaps, right? On the momentum, it's on trend. So when this thing opens here, right, and it comes down and it fills the gap to the 2 prior daily candles, right, and then fills back up and closes here, then the next day we open up, right, fills the gap down to what? Close price. Comes back up, ranges. This one gets engulfed a little bit, stuck, but then this huge bad boy here gapped up, ran, and then we had another gap up. That's a little bit of an exhaustion play. You open up way here, we gotta fill back down, and especially after something running 2 days, 54 points. Very highly unlikely that was going to have a big continuation day after something like that. We're just a little too extended. We take a peek at something like the weekly chart. Excuse me. You can just see we're there's light years away from the 90 MA here in the weekly, 115 points, 20-some%. Last time we were getting that kind of extension in a FOMO attack here on Tesla, we were just in earnings and people thought I was crazy for continuation here. Now look at it. So I just wanted to give you guys a little bit in-depth breakdown, a little bit of technical analysis, the same stuff I use. It's very simple. I take the very simple approach for support resistance. I do have a lot of different systems like algo trends and volume beat systems and the 4-hour chart systems that we use in boiler room trading. But this is just a very simple breakdown of what the price action was, why I took those puts, and the trade recap for the day. So we'll catch you guys on the next one.